Welcome everyone to Vested Interest. This is Shane, and in this video, this is our weekly portfolio update. We're going to cover the $1,833 and some change that I added to the portfolio, any dividends received, any options I was in for the week, what I purchased with these funds. But before we get too far in the video, I'd like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos, and a special thank you to the subscribers of the channel. The channel continues to grow because of people like you. You guys are and gals are awesome. On this channel, we focus on dividend growth investing. It's not rocket science, in my opinion. The best way to do anything, keep it as simple as possible. So it really boils down to consistently investing, buying dividend growth stocks and growing companies with positive cash flow that covers the dividends and companies with a high return on their invested capital. I utilize both a dollar cost average approach, consistently investing into the stocks on a weekly basis, which I cover. That's what this video is. I also do larger purchases. If I was to get a bonus, which I typically do around March, April timeframe, or if I was to do a side job or something like that where I ran into some extra funds, those would go into the portfolio as well. I will cover that as well. I cover all my investments into the portfolio. It is free to do, free to see what I'm doing on this channel. I don't have a paid Patreon account or any other sites I'm trying to send you to. But if you would like to help out the channel, if you could take the time to hit that thumbs up button down below if you find any value in the content, make sure you subscribe to the channel, hit that subscribe button, join us on this journey to financial freedom, join the Vested Interest community, click the notification bell down below so you're notified whenever I put out any new content. Again, I do this portfolio update every Sunday. I also do a stock pick of the day video series Monday through Thursday when the market's open. We take a look at a company stock that's pulled back and run it through my screener. There's the thanks button down below for anyone who might want to buy me a cup of tea. Really appreciate it. And again, special thank you to all the subscribers and viewers of the channel. You guys and gals are awesome. All right, options is where we're going to start here. And we did have a better week of options. We went in just like we typically do. Here are the options plays that we looked at. We tried to run a covered call on HPQ, 2 contracts there. A covered call on Cisco, ticker CSCO, HPQ and Cisco, both out of the information technology sector, 2 contracts there, and a call on Pfizer, which is out of the healthcare sector, 3 contracts there. So the 2 that hit out of the 3, and this is pretty typical. I'll go in on Mondays or Sundays and typically put in 3 or 4, sometimes 5 different plays that I'm trying. So far this year, it has not been very good, but this week we had a little bit more luck. And we did get the Pfizer covered call here, 3 contracts. That's what the -3 stands for. So that means I own over 300 shares, or at least 300 shares there. 1 contract represents 3 shares. And the HPQ 2 shares contract. So let's go through them here. So we sold to open. Again, that means we owned the shares outright. 3 contracts. That's what the -3 means. A $27 strike price with a end date of February 28th, right? So 3 contracts, end date February 28th, which was Friday. So I always do these 1 week out, start them on Monday and end them on Friday is what I'm typically doing, at a $27 strike price. And 12 cents per share is what we received minus the fees, amounts to $34.40. Same thing, sold to open, which means we own the shares of HPQ, 2 contracts. That's what the -2 is. HPQ is the ticker, Hewlett Packard, right? That's the company. And February 28th, same expiration date, $37.50 strike price. So that means the $27 and the $37.50, it would have had to close above those numbers, right? So 37.51 or above, or even 37.50 and above, it would be called away. If it was $27 or above, it would be called away. 45 cents per share for that one, minus the fees, $88.93 total. $123.33 options total from the 2, well, 5 contracts really, but from the 2 plays there. And then they both expired out of the money, which means they were below the strike price. So I keep the shares, keep the options premium, and we look to do it again next week. And we'll probably, and we've been using HPQ, Cisco, Pfizer, and a couple others pretty much every week. CVS was in there for a little bit. Several others. I try to run them on, like Pfizer, I'm down significantly. HPQ and Cisco, they're up. So, right, I feel like these 2 are at the top of their range, and this one's at the bottom of its range. So I don't mind adding a little bit to Pfizer. If it was called away, I'd run the wheel and add those back in and try to add more shares. And same thing, HPQ and Cisco, they're at a price I'm not afraid if they were called away, I'd probably just let them go and maybe buy in whenever they come back down, or just let them go and shift the funds somewhere else. So that's kind of how I look at options. Really low, or really at the high, where I feel it's the high end of 52-week high. All right, those were the options. We did not receive any dividends, so kind of a little different week this week. Usually we've been getting pretty good dividends and no options. This week we got some options and no dividends, so a little reverse of the trend that we've seen most weeks here so far this year. All right, we get into the first new funds added to the portfolio, $1,395.35 added on February 24th. We bought with those funds 6 shares added to our Comcast position, ticker CMCSA, out of the communication sector. This is one we're trying to build out while it's below our cost basis. Picked up those shares at $36.46 per share. I think my cost basis is right around $39 and some change, so I am trying to bring down my cost basis on this one right now. 4 shares added to our Cisco Corp. This was one we focused on for the month of February. So we ended the month adding 4 more, and Comcast was as well, adding 4 more shares to ticker SYY out of the consumer staple sector. Picked up those 4 shares at $73.08. And right around $73 or lower is where I wanted to add this one. So it's above that now. I think it ended the week at 75. We'll probably pull back unless it drops back down into the low 70s, high 60s again. We'll back off this one and just let it run. NextEra Energy, we added to the last couple weeks, added 4 more shares to NextEra Energy, ticker NEE. This is a utility company out of the utility sector. And this one is also on our stocks to buy for March list, 4 stocks to buy for March. If you haven't seen that one, 4 stocks I'm buying for March 2025, go check out that video. NextEra Energy is one on that list. Added 4 shares this past week there at $71.12, and that's kind of right around where we want to add it. 73 or lower is where I'm really at with that. Similar to Cisco, 73 or lower is where I was at with that one. I think this one actually ended the week a little lower than where I got it at $71.12. But again, I'd like to continue to add this through the month of March and build this one out a little bit more. Very nice recent dividend raise on this one as well. And 12 more shares to our Occidental Petroleum Corporation out of the energy sector, ticker OXY here. Added those 12 shares at $49.98. Another one that was a little bit below my cost basis by the end of the week. $49.98 was slightly over, but I think it ended the week in the $48 range. Now this one I've been building out for a while. This was also on the stocks I wanted to add for February list. We're very close to running over 200 shares on this one. I think we've got 6 more. I'll probably get it to 200 shares and then maybe back off. I'm not going to be adding 12 shares, but I might still nibble on this one a little bit so long as it stays under the $50 range or around that $50 range. So the $1,395.35 new shares added to the portfolio added an additional $36.66 in passive income over the next calendar year from these new shares. And we weren't done. We went back in on February 26th, and to be honest, I should have waited till the Friday there, but I knew I was going to be a little busy at work, so I wanted to get in and make sure I got all my funds invested, but I wish I would have waited till the 28th there or even the 27th because the market did drop down, and I could have got some of these a little cheaper, but that's the nature of the market. You never know what it's going to do. Could have just as easily went the other way. We added an additional $438.06. With those funds, we picked up 10 shares of Vale, ticker VALE. This is a mining company out of the material sector. Picked up those 10 shares at $9.90. Well below my cost basis in the $11 range. Want to continue to add to this one as well. Try to bring down my cost basis while it's under $10 or around $10. That's where I've been adding it. 5 more shares, and the next 2 are going to be our weekly adds. We add these weekly regardless of what the market is, at least 3 shares of SCHD. This week I did 5 of Schwab Strategic Dividend Growth ETF, ticker SCHD. Most of you are probably aware of that one. Picked up those 5 shares at $28.36 per share. And the other weekly buy is at least 1 share of Vanguard's Total Stock Market ETF, ticker VTI. Picked up that 1 share at $295.28. And I think this dropped down into the $290 range by the end of the week. So could have got it a little bit cheaper, but again, that's the nature of the market. I hope it stays down there so I can add it, excuse me, add it cheaper next week. So $438.06 added in new capital, and the new shares it picked up added $28.50 in passive income over the next calendar year. Total invested this week, $1,833.41. Total passive income added $65.16. Very, very nice to see that passive income added. If I can add without any dividends right around that amount every week, that is very nice. I don't mind that at all. $65.16 raise on my overall income for the year. Really like that. Really nice to see. Again, without any dividends this time. So that's about, and at $1,800 is a little bit more than I typically invest. usually around 1,500 per week. We've been a little above that. Part of this is the options we received, but I've been a little bit above that right now, taking advantage of some of these pullbacks recently. So, but if I can do that every week, $65 or around $65.16 added in passive income, I really like that. All right, let's run through the sector weights here real quick. Communication sits at 10.86% of the portfolio. Consumer discretionary at 2.19. Consumer staples makes up 8.10, energy at 8.64, financials at 2.62% of the total pie. Healthcare is in first place again at 13.78%. Part of that is the rebound on CVS and the rebound on Johnson & Johnson. Industrials makes up 6.72%. Technology at 13.7%. It's in second place, but excuse me. But we are looking at adding. Google has pulled back again. LRCX has pulled back again. If you haven't checked out the stocks, the 4 stocks I'm looking to buy in March, go check out that video. You'll see what I'm looking to focus on. But probably going to be adding something to the information technology sector here as long as they stay pulled back. Materials at 9.07% of the portfolio. Utilities at 8.45%. Would like Vici to pull back into the $30 range or below, and then I would add there. And REITs and real estate at 5.60. I'm sorry, utilities at 8.45. REITs and real estate is what I was talking about with Vici at 5.6% of the portfolio, and ETFs at 10.27% of the portfolio. Eventually, this will be the largest chunk of the pie here, just by the nature of adding to SCHD and VTI every single week, regardless of the market. Over here to the right, you can see those same sector breakdowns by percentage and then the dollar amount allocated as well. All right, and here it is. I like to show you my overall portfolio and the performance, all the positions I own and the performance every week, so you can see a real portfolio built out over time, the ups and downs of a portfolio and the ups and downs of the market. I hope that it helps some of you out there who maybe have just started a new portfolio and you're starting to see some red in some positions, so you don't freak out, right? If you've done your research, they're good companies with growing cash flow, growing revenues, expanding margins. Then the pullbacks should be the time that you buy, right? You should want to buy stocks as cheap as possible. It lowers your risk, lowers your exposure a little bit, the cheaper you can get them. So when you see that red, if you've done your research, you know it's a good company, you know the margins are expanding, you know the revenue's expanding, you know it still is a good company, you know exactly what you want to buy or around ranges that you want to buy the company at, and it's dropped well below what you feel is fair value, that's the time you should be adding. You don't want to lock in those losses just because you're seeing red freaking out and selling. That is the intent behind showing my portfolio every week. Hopefully it helps some of you see, right? You see red in my portfolio, right? Comcast, I'm down. Well, I'm adding to Comcast. I still think it's a good company. I think it's presenting more value at $35.88 than it did at $39.73, right? If I walk into a store and I was expecting to buy a pair of shoes at $70 or $80, $90, and I walk in there and there's a sale, 15, 20% off, and I can get them for $40 or $35, I'm going to buy them for $35. I'm probably going to buy a pair of socks to go with it, right? So that is what I am trying to show you here. Other positions, HVT is down. I was nibbling on this one last month. LRCX, maybe that's one I want to add to again now that it's down below my cost basis, right? Google has pulled back significantly back towards my cost basis. I might want to be adding there again, even though it's slightly over my cost basis. Is 170 a good price for Google? I think it is. LyondellBasell, again, down 10%. Might be willing to add a little bit there. Nutrien, same thing. Occidental, this one I still want to build out. It's right at my cost basis, it's a little bit lower. Pfizer, we were running options on that one to try to make a little bit of income and make up for this loss right here. Haven't really added much there, but I could. And Valet, you just saw I added 10 more shares there. So right when I see this red, if they're good companies, nothing's changed the fundamentals of the company, I want to add more. That's what I want to do. I'm not running out of the store whenever I see a sale. And that's what the stock market is. It's a store just like any other store. You just happen to be picking up stocks, right, from this store, from the stock market. All right. So again, hopefully seeing this every week helps some of you out that may be newer investors or haven't started that journey yet, that you can do it. I am not a financial guru. I didn't go to college for finance. My parents were not wealthy. They didn't teach me this. I'm learning it on my own. I do make mistakes. That's the other thing I want you to see. My mistakes, I try to correct them as quick as possible. and try not to make them again. And that is the nature of investing. You will make mistakes. The greatest investors in the world make mistakes. They've admitted it. Warren Buffett would tell you one of his worst purchases was Kraft Heinz, which I recently sold, but he still holds on to, right? So even the greatest investors are going to make mistakes. So overall, here's where all the positions in the portfolio right here in this column, total shares, and all of the numbers will be as of the close of business on Friday. That's whenever I tried to update it right there on Saturday morning is when I typically get in and update it. So it's all updates after Friday's close. Total shares in this column, current price, again, as of the close of business on Friday, market value here, average cost per share, my purchase price. This does include reinvested dividends. Average cost per share also includes reinvested dividends. I do adjust this as they pay out dividends. I adjust the number. As I add shares, I adjust the number. Purchase price, same thing. Total return, whether I'm up or down, I'm going to show it, right? Obviously, if you see red, I'm down. Here is just another way to look at up and down the percentage. The more green it is, the more up. The red means that it is down, right? What sector the company falls in, whether they're a quarterly, monthly, semi-annual payer. You'll see some of these that are highlighted yellow. That just means they've raised their dividend already for the year. So as they raise their dividend, I will adjust their payout and I will highlight it yellow. Current yield here, my yield on cost here, portfolio weighting in this column. So on the previous page, we saw the sector weightings. This is each individual weighting, and I do have a rule in the portfolio. I do not want any one position to be more than 10% of the portfolio. Now, that might be a little bit flexible, right? If a company runs up real fast, it doesn't mean I'm going to just sell it because it's run up and maybe gone to above 10%, but it would mean that I'd back off and not add any more to it, right? And then try to balance out the portfolio by adding to other positions. And I don't want any one sector to be more than 25% of the portfolio. But same thing, that would not account or would not that would not be applicable for ETFs, right? Eventually, that will be probably over 25% of the portfolio just by the nature, again, of adding to it every single week. Estimated annual income in this column, payout months here, dividend growth year over year here. I do adjust this as they adjust their dividends, right? Most recently, NextEra Energy raised its dividend up. I think it was around 9% last year. They're at 10%, 10.12% currently. Same thing, HPQ recently raised their dividend, several others here. So I adjust these as they adjust their dividend. 15% of a 52-week low. So this column is kind of where I want my high water mark for my average cost per share. Let's talk about that real quick. NextEra Energy we will use as an example. You saw that I added 4 more shares to this last week. It's also one I want to add to in the month of March. It's around $70. I'd like it $73 and below is where I'm willing to add to NextEra Energy. That is over my cost basis. I'm up 24.4% on this position, but want to add to it, right? So my high water mark is $62.04. So I will add to it, even though it's above my cost basis at $70, $71. I purchased it at $71 this past week. If it's $69, I'll buy it. If it's $71, I'll buy it. If it's $72, I'll buy it. I'll probably add another 4 shares here. But I don't want my average cost per share, this $56.40, will go up as I add. I don't want it to go above $62.04, right? That's what I use this column for. It gives me a high water mark for my average cost per share. I want to be at or below 15% of a 52-week low, preferably much lower than 15% of a 52-week low. Eventually, I will be much lower, but that's what this column is for. As I build out the portfolio and I want to add to positions that are above my cost basis, like NextEra Energy, I want to give myself a high water mark to not go over, right? That way, if it pulled back significantly, maybe it doesn't drop below my cost basis, right? All right. So total shares, 6,952.683 shares. Current market value of the overall portfolio, $344,508.29. I have $314,823.76 out of my pocket. This does include reinvested dividends, and I say out of my pocket, so it's not just new funds from my paychecks. It is also reinvested dividends. But if I turned off the DRIP, which I have turned on, right, dividend reinvestment plan, so the funds, whenever a company pays out dividends, just go right back in and buy more shares. If I turned the DRIP off, the dividends would go in my pocket, or at least back in my account. So that's why I say out of my pocket, but it does include reinvested dividends. Total return, $29,684.53. I am up 9.43%. Nice to see, but I do not focus on this. I say this every week. It's nice to be in the green, but unless I sell out of all the positions in the portfolio, I don't lock in this game, right? So Nice gain to see. Total gain is real nice to focus on if that's your focus. Nothing wrong with that. But unless you're willing to sell out of all your positions, total gain doesn't really mean anything, right? And even being down doesn't really mean anything unless you sell the positions, right? Unless I sell AT&T, I don't lock in this 59.95% gain. Nice to see that I'm up 60%, but if I don't sell it, I don't get it. And it could drop back down tomorrow 20%, right? So that doesn't really mean much. I don't like to see that I'm down 18% on Valet, but unless I sell Valet, I don't lock in this loss. That's just the nature of how stocks work, right? That's an unrealized loss, and that's an unrealized gain. And they're unrealized because I have not sold the positions. I continue to hold the positions. So again, nice to see that I'm up, but not what I'm focused on. Current yield of the portfolio, 3.752%. My yield on cost, 4.106%. And this, the reason it is circled in red, this is what I focused on. The dividends, the annual dividends received from all the different positions here continues to go up regardless of the market, whether the market's up, whether the market's down, whether the market's floating sideways. As I add new capital, as the positions in the portfolio pay out dividends and buy more shares because I have the drip set, and as they raise their dividend over time, this continues to increase week over week, month over month, quarter over quarter, and currently sits at $12,926.97. I don't think we will get over 13,000 next week, but we definitely will the following. We will be very close next week to busting over that 13,000 in annual dividends next week. We'll see if we get there. It might depend on what positions pay out dividends. We're going to be pretty close, but I know the following week we will bust over that $13,000 mark. So really looking forward to that, and really nice to see that we are back on the upswing here. We did some realignment in the portfolio, reallocating funds, sold out of a couple positions, and spread the funds across the portfolio, and I think it has worked out for the better, in my opinion. Dividend growth year over year at 6.64%. Again, we will adjust this as the companies adjust their dividend growth, but it kind of tells you what the portfolio growth for dividends would be year over year. All right, that is it for this one. Let me know how your portfolio is doing. We have seen a bit of red lately. Is that impacting your portfolio? Mine is not impacted as much as some others. I know some people who are very tech heavy are really getting impacted right now. I'm looking at those downswings as a buying opportunity. Like I said, LRCX, Lam Research here is back in my buy territory. Would love to build this one out. Would love to get it to over 200 shares. And Google, I'd love it to drop down into the 160s again. I'd add to that one as well. Tech sector seems to be pulling back right now and seems a bit of a rotation into undervalued dividend growth stocks. All right. That's really it for this one. Let me know how your portfolio is doing. What are you buying this week? And what are you buying as we head into March? Can you believe it? We're already in March 2nd. It doesn't look like this out back anymore. Most of this snow is melted. Still have ice on the lake, but it's been 40s, 50s here in Michigan lately with some rain, actually. So we don't have this anymore. So I'll have to get a new updated picture here quickly. But as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up. Ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. And drop a comment down below. Let me know what you think of the videos. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. Again, I do that Stock Pick of the Day video series Monday through Thursday. So if you have a company you'd like me to cover in that series, go ahead and put it in the comment section. I'll try to work it into the rotation on a day it drops. So another reason to click that notification bell as well. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you have a great weekend. Thanks for tuning in, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion. Investing for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and selected criteria, or seek the advice and counsel of a certified financial advisor.